We're here today to discuss crypto and how this fits into financial inclusion. And what we've been finding is that crypto are obviously pushing the payments boundaries to become mainstream payments, like you do and like we have been for many years now with your debit and credit cards. Crypto is now becoming more of an accepted way of making payments. We're here today for the Payments Association and to discuss this with the CEO of Crown Agents Bank, Bhairav Trivedi. And Bhairav, Crown Agents Bank is a leading provider of FX and payments in the frontier and emerging markets. Bhairav, do you want to introduce yourself and give us a quick background of what Crown Agents Banks do?
Absolutely. Thank you, Cormac. Again, as you mentioned, my name is Bhairav Trivedi. I'm the CEO of Crown Agents Bank. I have been with the bank since January of last year. So I came in the middle of the pandemic. And it was quite an experience, right? I mean, doing things virtually for a long time, but we are gradually creeping back to normal. And we're seeing some of the impact on business in terms of, what's coming back. But as you mentioned, Crown Agents Bank is a bank with a long history in this business. The bank itself is about 188 years old and has strong ties with the Crown from the start when it was, worked with a lot of the Commonwealth countries across the globe. And we continue that tradition today. And we are probably one of the leading foreign exchange providers as well as payments providers to emerging and frontier markets. Big focus on Africa, but also not to be forgotten is the fact that we are pretty dominant across Asia as well as across the Caribbean and Latin America to a lesser extent. So in that sense, we are truly global. Today, we operate in about 190 plus countries and 140 plus currencies, and very dominant across that space. In terms of crypto, what I would like to talk about today is digital currencies, because I think, when people talk about crypto, there's a natural slant towards something called Bitcoin or Ethereum and a couple of the others. And when I think about digital currencies, it's really the whole thing about taking a currency and making it digitally available. So you've got various segments in that, right? So we look at crypto, which is one piece, and that would be broadly a lot of the big currencies that you hear of constantly in the market, because they're highly speculative in nature. And so, you hear about people becoming Bitcoin billionaires. That in itself has not done much for financial inclusion. And then you've got, on the second front, you've got what are, a new emerging piece, which is not at all speculative in nature, but more stable, called stable coins. And these are coins that are typically pegged to a fiat currency like a dollar or a pound, so that they are stable in terms of not being speculative and not having a fluctuation in value. And then finally, the last piece of the digital currencies is really central bank digital currencies. And these are central banks across the globe converting their domestic currency into a digital element so that it can facilitate trade and probably helps a bit on the financial inclusion to start with, but over time could be pretty dominant on financial inclusion, because it would allow those people that are averse to traditional banking to be able to actually maintain their portfolios in a digital format. So those are the broad three base things that I want to talk about today.
I mean, that's a great introduction. Thank you for that. Because I know very little about cryptocurrencies and decentralized financing and CBDCs, as you mentioned, when you Google crypto, the Oxford Dictionary says that it's concealed or secret. So how is cryptocurrencies, which include the three that you've been describing there, how are they going to help or level the playing field for consumers that are, excluded or underserved? How is that going to help us?
Absolutely. So that's a great question. I think, so for that, one has to go back in history to when cryptocurrencies came about. Their initial introduction was primarily to, I'm not sure if this is the right word, anonymize a transaction. So in a traditional transaction where there's an exchange of cash, everyone physically sees that cash taking place. Whereas in a cryptocurrency, the idea was that you could pay for something with a non-government-backed currency, right? And that would allow, the transaction to take place without necessarily being in the domain of legitimate transactions to start with.
Yeah.
Over time, that is morphed so that, while the illegal aspect of cryptocurrencies has virtually disappeared, today we do find that a lot of cryptocurrencies are used for transactions where people don't necessarily want to announce the transactions. So it is in some sense covert in nature, right? And to that end, like a Bitcoin, no government is tracking a Bitcoin because they don't have that information available with them. However, one can track who's got a Bitcoin because of something called a public ledger, which is, blockchain, or could be DLT, things like that. And those are different technologies. And what a public ledger is like a book which maintains where these transactions have gone, and it's available to everyone to see. So while I cannot see that I paid you in Bitcoin, I can see a Bitcoin moved from one person to another without necessarily identifying those individuals, right? And with just a series of numbers. So that's how it's morphed over time. Unfortunately, what tended to happen with Bitcoins is because of the nature of the fact that they were scarce and weren't, publicly available, over time, they started to increase in value. And so, if you go back, everyone talks about Bitcoin when it was I remember when it first launched out there, it was pennies to a Bitcoin. And today that could be in the several tens of thousands of dollars, right? And it's become highly speculative in nature. And that's because there's a rarity impact on Bitcoin because they're not as freely available. And so that has created speculation in the market, which is great for investors. But unfortunately, it isn't as good for people that want to make traditional payments. If I had to pay you 1,000, say 10,000, and the value of Bitcoin today was 10,000, and I had to pay you $10,000, I could send you one Bitcoin, but by the time it got to you, would it be 8,000? Would it be 12,000? You don't know. Yeah. And so in that environment, would you be willing to take a corporate payment for that? And so, because of the speculative nature, or if I was sending money back home to mom, and I know if I sent $1, she would get $1. But if I sent a Bitcoin, would she get $1.20? Would she get $1? Would she get 80 cents, right? And that is the key. So that's why on traditional payments, crypto in that sense is not taken off quite the way it should. Okay. Then the industry is morphed and come out with alternatives which are working, but they're still early in nature. And so it's one of those where we're going to have to take a wait and watch attitude on how that moves.
Okay, so that makes sense. So the current user case for using crypto or traditionally up until now has been a bit of anonymity. I can't even say the word.
Anonymous.
Thank you, anonymous. So going forward, then, how do you see this changing in the next 3 to 5 years? And is the wider adoption of crypto payments, what is the future user cases for crypto then?
So that's a fantastic question, right? I think the industry recognized that because of the speculative nature of cryptocurrencies, they aren't very adaptable for traditional payments where you want a fixed value. Yeah. And so what I think the industry then started to look at what was called stable coins. And what stable coins are is they are pegged to a fiat currency. A fiat currency would be dollars, euros, typical G10 currencies, GBP, etc. And so once you're pegged to $1, if the value of a stable coin is $500, it will remain $500, regardless of how it moves, right? And so that then started to say, great, this is an opportunity for traditional payments. But you still have a problem because if I want to send dollars to, say, a New Zealand dollar, right? I could send $1 and convert it to a stable coin, but then at the other end, people can't spend the stable coin because they're not widely adopted by merchants, by people who traditionally take payments. And so in that environment, they would have to then convert the stable coin back into a local currency in each one of the destinations. So all you're doing is adding an additional step, and that doesn't make sense from a typical transactional perspective. Now, where it does make sense is digital coins are immediate settlement, right? If I send you a digital coin, you have it right away. Unlike if I sent you a transaction through SWIFT or a wire, it would have to hit your bank, which could take anything 24 to 48 hours, and then the bank would confirm the money is in the account, at which point you can spend it. But a digital currency is something you have available immediately because it's sent by a digital method. And that's where the advantage comes in of digital currencies. So, we've got stable coins, and now I think more and more central banks are saying, I want to legalize this. So how do I bring about central bank digital currencies, which would allow me to convert my local currency, which is a paper-based currency or a coin-based currency, into a digital format so that you've got instant settlement and you've got the ability to actually be still in your domestic currency. So that's the big trend we are seeing right now. I think, we're seeing a lot of emerging markets are starting to adopt this. China was probably the first country to actually adopt the yuan. And subsequently, we have countries like the Bahamas that have gone out and done it. We're seeing several African countries have now started to get into the fray. And even some of the largest G10 countries are making sure that they get in, because the last thing they want to do is be left out.
Yeah.
And so, we've got on the Africa side, we've got Nigeria, which has got the e-Naira. I think Ghana has just made an announcement and they should be launching their e-Cedi quickly, as well as we've got several other African countries that are launching these currencies.
I mean, there's also believers, skeptics about crypto and so on. What makes you a crypto believer? Why wouldn't somebody like myself, who's very uneducated in this field, why should I become a believer and a user of crypto?
So I think when I look at it, I look at business cases, right? So today, think about it on the financial inclusion side. We saw across a lot of the frontier markets, specifically with Africa. I think all of us have heard about the case for M-Pesa and how a mobile currency, actually a mobile wallet, really enhanced financial inclusion.
Yeah.
Now think about the only problem with the mobile wallet is you have to get a traditional currency into it, right? Because those currencies are not digital. Imagine if you now converted that currency into a digital format, so no physical currency ever needed to change hands, right? If you go back to the days of M-Pesa, what used to happen is it originated because there was a specific problem in Kenya. People that were traveling from their villages into the city to make large purchases typically went into a location in their village, handed over cash to someone that converted it into a mobile wallet. And then when they got into the city, they would then cash out that mobile wallet and use it for whatever. Over time, that morphed into now, once the money was in the mobile wallet, they could then do transactions using their mobile wallet. But imagine the need to be able to get that money into the mobile wallet in a digital format so that everyone had that. So think about currencies where they're completely virtual. And this is where I think you're really going to see an enhancement in financial inclusion over time. So what excites me about this is that, number one. The second is, as I look at foreign exchange and moving currencies globally. Today, if someone wanted to send dollars into Naira, they would actually go to a bank and send them money. Typically, that transaction would take anything up to 2 days to settle because the funds have to physically move from the US bank to the Nigerian bank and then be available in the Nigerian bank so that the bank can then confirm, yes, they're available, and then you can start spending it. With a digital currency, that changes dramatically because what you do is you move a digital currency, it is instantly available.
Yeah.
So your settlement times could be cut by 2 days. Today, I think one of the biggest senses of loss is that people move currencies, and by the time they actually settle, the exchange rate could have changed. That money is not in circulation for that point in time, and so that creates an issue. There's a broader, one last thing, there's a broader piece also on central bank digital currencies, which is it allows the central bank to know at any point in time where the money is. So go back to traditional notes today. Okay, the Bank of England issues, say, £1 billion in fresh currency out into the market that gets listed in the M2 money supply in the market as £1 billion. Well, we don't know really whether there's £1 billion in circulation, or it's 900 million, or it's significantly less than that, because it could be, some of it could be in someone's mattress, some of it could be in my pant that got put into laundry and got washed, and the note got damaged, and things like that. With a digital currency, the central bank at any point in time knows exactly this pound was with Cormac, it moved from him to Bhairav, from there it moved to John, from there it moved to so-and-so. So you know at any point in time exactly how much money is in circulation. And I think that is an amazing thing for central banks to be able to monitor their currencies, to be able to know how the economy is doing. It changes everything to make it instantaneous, which I think is a real positive.
But how does that help somebody to be financially included? The ones that are being unbanked at the moment, how is that going to help them? So you discuss sort of more on the corporate side, but does crypto effectively help the man on the street who currently doesn't have a bank account?
Absolutely. And so let's go into the fundamentals of why people don't have a bank, right? It could be, number one, they're apprehensive about working with banks. They do not trust banks. And the third thing could be that they don't feel wanted at a bank, right? If I walked in with $10 to deposit in an account, I probably wouldn't get the time of day from most important banks, right? Because they'd say, why don't you stand in line? It goes back to the remittance industry, where people were getting remittances, but they would be told by the banks, please come in once, take out all the money from the ATM, and do not show yourself too often in the banks, because they didn't want those customers. They wanted the high-end customers. So those people traditionally remained unbanked. With a digital currency, they don't need to go anywhere. They could do everything from the satisfaction of their mobile phone. And you've found now that more and more countries, especially in the emerging and frontier markets, are offering incentives to mobile wallets. So if you go to Ghana, what they do is they allowed all the mobile companies to actually pay interest on a mobile wallet. Okay, so now suddenly that was the last need, that you needed to go to a bank because you could make interest on your money. Even that has disappeared. So that incentive now allows everyone to open a mobile wallet. Sometimes it could be just, a sheer time frame issue. You don't have the time to go into a bank. A bank is far off. It's not reachable. But with a mobile wallet, it's something that you have in your hand all the time. So with the digital currency, you would now be able to do that. And you don't physically need you could designate that I want my salary to be paid in digital dollars, right? And at which point then I've got all my salary in digital dollars. I could put that on my mobile phone. I could, if I love hiding stuff under the mattress, I could literally take that money and keep it somewhere in a virtual world. But I know at any point in time, it's always available to me. It's not that I need to go back to my mattress and pull it out from there and wonder whether someone has stolen it or not. It is always available. And that is going to be the biggest thing that encourages financial inclusion, because now everyone has access to that money.
I saw a headline, and I didn't read it, but something about the EU passing a new law that they will not accept decentralized ledgers type, crypto type things, just last week. Did I see something about that right, or did I miss something?
That's right. And I think again, this is still a little bit speculative in nature, only because people are trying to understand these technologies, right? I mean, if you think about these centralized ledgers, just think of them as big books that are out there in virtual space, and anyone can take a look at it and see where the currency is moved at any point in time.
Yeah,
which is great, but then it creates problems on confidentiality, etc., right? And we are keeping things tight. It is public, so you could never say I didn't pay someone, or you could never say this did not happen. I just think people are trying to figure out what exactly that technology is going to be going forward. You've got blockchain, but blockchain got a little bit of taint because of Bitcoin. right? Because it was the underlying technology for Bitcoin. And so blockchain then came out with subsequent different versions. Now you've got DLT, which is, I think, distributed ledger technology. And basically it's an acronym for blockchain, but it really is slightly different technology that still maintains everything in a common ledger, and the ledger is distributed across the Ethernet or the virtual space so that everyone is aware of what happened on that transaction.
Bhairav, I hope we get to meet each other sometime soon in real life. But thank you for all your time, and hopefully we'll catch up again soon.
Absolutely. And given that we're talking about digital currencies, it was apt that we did a digital session so that,
Absolutely.
we are completely in sync with what we're talking about.
Absolutely.
Thanks, Cormac.
Thanks very much. Take care then. Bye-bye.
Bye-bye.